Hello and welcome to this morning's London Forex webinar. Thank you for your patience while we setting up the recording of this session. But as always, before we start, I do have to draw your attention to the disclaimer, which I believe you can see on your screen. As you know, David is giving me a nod. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, it's both myself and David here who will be running this session. It's only ever David and I anyway, so I don't know why I say that. But however, I do know we have new visitors coming along to this session, and they may wonder who that person is sitting next to me. Well, this is my husband David, and we've been trading together for many years. We've been married even for a long time, and it's been an absolute delight, both the marriage and the trading. Anyway, what we do in this session is we obviously look at the markets, and we look at the markets through the prism of volume price analysis, and also how we apply, or you can apply, the quantum trading tools. These are trading tools that we've developed. When did we first start developing? About 5-6 years ago, I think. Yeah, longer than that. Yes, time goes so quickly these days for us, so maybe it's a symptom of getting old. Anyway, that's what we're going to do. We're going to see what's been happening, but more importantly, what is happening at the moment, and even more important than that, what is likely to be happening. How can we anticipate what the price action is going to be in the session and the day ahead. This is the first of 3 webinars that we run today. Now, usually we're here on a Thursday, but for various reasons we had to pull these sessions to Wednesday. It's Wednesday, not Thursday. Next week we are back to Thursday as usual. As I said, we look at the markets through the prism of volume price analysis. I also know we have visitors to these webinars who maybe have just read the books that are available on Amazon that explain this amazing methodology. It's not a new methodology. It is taking what has gone before from some of the great traders of the past, and we've kind of added to it and built on it and added different elements to it. But VPA is the technical analysis side of how we look at the charts, because there are 2 other elements that we have to consider. One is obviously the fundamental. Most traders know that, but more and more these days we have what we call the related markets, and that's how all the 4 capital markets interrelate with each other, how they bounce off each other, why moves in one can be reflected in another, and the currencies, if you like, they sit at the center, and the currency market is the first market that can respond the fastest, the quickest. And we saw that yesterday with in reaction to Brexit. And I suppose Brexit, if you like, there's now a 4th strand, to this, and that is the political risk that the markets are now being affected by, much more so than. Do you ever remember a time when political risk was such a huge factor? There've always been what we call geopolitical risks, such as, God forbid, war breaking out, the Straits of Hormuz being closed. That would affect oil. Because oil would be affected, then you would see that in the stock market, because if the oil price goes up too quickly, there's a short supply, etc. That's all fairly logical, and you can see how that would all connect together. But we don't really remember a time when the political risk that was the risks coming from the political arena in terms of the trade war rhetoric, the Brexit, obviously it's been dragging on for, it seems, forever, as it were. Every time there's perhaps a referendum in a country, that's much more, they're much more centre stage. That's what we're trying to say. Covered in the books that are up on Amazon. We've bundled them all together for Forex trading. We call it the Forex Trading Library. I think it's $9.99, and it's actually the digital version. So, as I said, all the markets are interconnected, interrelated. This is from a slide from our education program where everything is explained in huge detail. And it's, as I said, the Forex really is at the center of it, because that is the market that reacts the fastest. So it is not only a market of sentiment towards an individual currency, but currencies represent risk on and risk off. But as I said, not only does it represent the sentiment, that sentiment is what we trade, if you like. When we see currencies being bought or being sold, in part, that is because of the sentiment. It's also because of the exchange rate value and other drivers such as the fundamentals, but you also have to factor in as the sentiment, the broader market sentiment, and they all interrelate. That's all explained in the program. And finally, these are just 4 of the tools that we have developed for. These are specifically for the Forex market. The tool that we really look at in these webinars, we really focus on what we call the currency strength indicator. And I was thinking about this the other day. I really think we called it the CSI because it sounded cool and it matches the TV program. But in a sense, strength is not just what we trade. We also trade weakness. So I suppose it's a currency market analyzer. What do you think, David? It tells us what is happening to the currencies in the different time frame. The individual currencies, are they being bought? Are they being sold? And there's all sorts of reasons why they're being bought and sold. But what it does, it just gives you a visual picture instantly of that, so you don't have to look at the 28 charts that make up the kind of the pairs that most traders trade. It's just one of 3: currency matrix, currency array, currency heat map, and we'll look at those as we go along in the webinar. So I'm just going to set some charts up, and I'm going to pass over to David.
Thank you, darling, and a very warm welcome to you wherever you are in the world. Good to have you with us today. I was going to say good morning. It's certainly good morning here, but maybe afternoon or even middle of the night for you. So a very warm welcome. I can see we've got a lot of regulars in the room today, and also 1 or 2 new names I don't recognise. So welcome to you too. If this is your first time that you've come along to one of these sessions, we're more than happy to answer questions. If you want, drop them in the chat box. We will take them there. If they're short questions, if it's a longer question, requires a more detailed answer, then we will answer it on air for you. Just to pick up on the point Anna was mentioning about how things have changed and the political overtones which now seem to dominate this market more and more. 5, 6, 7, maybe 7 or 8 years ago, I know a lot of traders still trade from a purely fundamental perspective. They look at the imbalance between economies and exchange rates and differentials and trade it accordingly. And I wouldn't say that doesn't work, but what I would say is that that has certainly changed dramatically over the last few years, whereby that approach has to take consideration of all the political ramifications and influences which now seem to drive these markets more and more. That's not to say fundamentals aren't important, they are, but it's the political aspect of, if you like, the fundamental nature of market relationships that is now increasingly driving this, particularly, of course, with the British pound at the moment. But it's also very similar drivers when you look at what happens in the US market. You only have to get 1 tweet from the US president, and that dictates the flow of sentiment for the next few hours and sometimes even days. And that really does encapsulate what we have to be aware of all the time. And that's relatively new, I would suggest. It's not something that was common, as I say, 5 years, 10 years ago. It's certainly not. So that's what we have to contend with. That's what we have to deal with. It's all reflected in volume, of course, which underlying all that will reveal what is truly going on inside the market. And in a way, it just reinforces the fact that to make money in these markets, you have to have an underlying methodology. And that underlying methodology for us is volume price analysis, because everything is revealed in volume. I'm going to pass back to Anna and we will get going.
Just a quick recap, because I'm completely thrown, because it's Wednesday. The news that is likely to affect us. Well, yes, we've got the CPI, and we're not going to be here at 9:30. But what you may see ahead of an important release like that, the Consumer Prices Index, is that you will. You okay? You lost something? Oh, fine. Whether is that going to affect the flows into the currency ahead of the news? And the answer is yes, because one of the questions I was asked by someone about how can congestion phases that you see on your charts. Congestion phase is when basically the price has no clear direction. It's just going sideways, basically. And there are all sorts of reasons for prices going sideways in the forex market in certain pairs. One of them is well, the session itself. Is it a session that particular pair, there's just not a lot of activity in it? I can think of some of the cross pairs in the Asia session. It's just not of interest to the local traders, because although this is a global market, it's also a local market, and you have to understand that each session has its own characteristic. First of all, it has its own level of participation. It's much lower in the Asia session. It picks up with London and Europe, and then the deepest participation is when we have New York, because we have 3 major centres open. So currency pairs go into congestion for all sorts of reasons. That is one of them. The second one is ahead of a major release or political announcement. We saw that yesterday, and with the British pound. The market knew that Theresa May was going to make some fantastic new announcement at 4 p.m. local time yesterday, and if you looked at the British pairs, the British sterling pairs, you would have seen, congestion, moving sideways, no clear direction. There was an immediate reaction by the market to her comments that she made, in the sense that just my final thought on Brexit, and it is not I'm not making a political point, I'm just making a point about the price action. Very generally at the moment, and it has been for some time, the market wants some kind of what we call here kind of soft Brexit, in the sense that there is some agreement with the EU, that there isn't just a hard break, a break, and then perhaps the agreements are sorted out afterwards. They want some kind of platform, some kind of agreement, called a soft Brexit. What that includes, all sorts of as a wish list, if you like, and that wish list goes from some close cooperation in the customs union to perhaps even a second referendum, blah, 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 blah. So whenever you have a situation like yesterday, Theresa May makes the statement, and the market sees that that is what she is offering, that's what's going on the table, and you think, oh great, that's what the market wants. It wants some kind of soft break. The pound shot up. That's the reason why. Then you get the political reaction. Then you get the reaction, well, it's all very well having a wish list of what you'd like to put to Parliament, but is it actually going to get through? And then as the political reaction comes in, the pound sold off, and that is what we saw yesterday. So that is an example, if you like, first of all, of why a currency pairs go into congestion ahead of a major political speech, or in some cases fundamental news. So you get the reaction to the words or the number, and then you get the if you like, the stepping back and thinking, well, what is the implication of this, if you like, is it actually going to happen? And that is what you are faced with as a forex trader. So if you like, not only do we have to do this on a daily basis, so we know what's coming up, and today being Wednesday, we've got, for example, we've got the FOMC, which is the biggie later on this evening with the Fed. It's obviously going to affect the dollar. But in between that, we've actually got core retail sales in Canada. And what you also have to do as a forex trader, haven't really kind of covered it very much in these sessions, because it's covered in the program, and that is, you have to kind of think ahead on a weekly basis, and even perhaps a monthly basis with forex, because in the forex market, first of all the news comes out it has a regular news cycle, fundamental news cycle. So we know the high points, if you like, months ahead, a week ahead. So as part of your analysis, if you are a purely speculative trader, and that is to look at the schedule of news events at least on a weekly basis, and say, what is likely to, well, okay, that's happening today, today's FOMC, what is that going to impact? Is there, and more importantly, is there going to be a trading opportunity there? And when is that trading opportunity going to occur? Is it going to be, how far ahead of that release? We know it goes into congestion just before the news, but there's an awful lot of what is called positioning before that, before it goes into consolidation. And obviously, perhaps as a day trader, when it does go into congestion ahead of the release. If you're in a trade, do you stay in a trade if you're trading the faster time frames, or do you say, do you know what, I'm out, I'm going to wait and I'm going to trade the reaction? There's a lot of factors to consider around news and politics, and I think David wants to add make a point, add his make a contribution to what I've just said as well. There's lots and lots. We could spend a whole webinar just talking about what you need to consider, what the factors are, even before you look at a chart, as it were, and then you think, because you've got to be prepared. What is it about preparation? You don't go into battle without knowing your enemy, preparing what is it you're likely, what is going to trip you up on not only a daily basis and a weekly basis, particularly if you like to trade particular pairs. You are focused on maybe one or two pairs. You have to be prepared. You have to also then understand what is going to move that currency and that particular pair. Do you want to just pass over to David, and we'll then go straight to the chart?
I think the quote Anna was struggling for was no one prepares to fail, but everyone fails to prepare, which is a truism, I'm afraid. Just to pick up on that and just stay with fundamentals for a moment, a couple of points. First of all, we, like probably 95% of the trading world, uses Forex Factory for the calendar events. But I have to say that I do find their classifications becoming increasingly bizarre. I don't quite know how they arrive at them. But when you scan your eye up and down and you look at things like, for example, trade balance in Japan is now yellow, as indeed are core machinery orders. Well, I would beg to differ. Crude oil inventories, for example, yellow again, not even orange. It's an important release. It impacts the market quite dramatically on occasion, particularly if the forecast is way out of whack with, or the actual is way out of forecast with what is forecast, and so on and so forth. You can scan your eye up and down there, and they sort of jump off the page at you. Excuse me a moment. So I do find them a little odd, and it's something that seems to be appearing more and more, certainly as far as Forex Factory is concerned. So all I would suggest is that just be aware of the ranking and compare it perhaps with another calendar that you can find. There's plenty of them around. There's one on investing.com, which is pretty good, but there's plenty of them. So just compare them like with like and just see what how they rank. I mean, you look at tomorrow, for example, we've got flash manufacturing PMI data overnight for the Aussie. Well, again, they've ranked it as yellow. It's important stuff, and yet you move into Europe and they rank it much with a much higher ranking. So the other point I wanted to make is that when, for example, today we have, and again, this is a common theme, we've got CPI data for the UK. Now, under normal circumstances, it's flagged as red, yes, it's important, etc. But given the overtones of Brexit, which carry far greater weighting, then the CPI data will have far less relevance and probably far less reaction in the market than one would normally expect. And that, again, is a facet of fundamental market behavior. It will be dictated by seasonality. It will be dictated by the cyclical nature of fundamental news, which goes on quite a big cycle from interest rates, high priority, low priority, and back again, and so on and so forth, and all the various fundamental drivers which come in that cycle as well. So just be aware of when data comes out. Yes, it's ranked as red. Yes, it's important. Under normal circumstances, it would be very high interest on the volatility level, but certainly as far as today is concerned, given that Brexit overweighs everything as far as the British pound is concerned, that carries much more weight than CPI will at the moment. That's not to say the market won't move. It will, but it won't move as much as it would under, in inverted commas, normal conditions. Just going to pass back to Anna and we'll get on to the charts.
All right, and just to finish on that, this is my profile for the British pound. In fact, we've been looking at the British pound. It's still selling off heavily following, as I said, it shot up. I'll just move these over for a second. It shot up yesterday, as I said, on the on what she was saying during the speech that she made to who was it to? Oh, journalists and what have you. And you can see here on the daily candles, this is the shooting up of the at the yeah, and then as soon as the political reaction came in, the selling of the pound then carried on. And I've closed out all my short pound positions. I closed out before last weekend, so it's a question now as whether do I want to rejoin the bearish sentiment towards the pound. This is a decision I'll make later on this week. But just wanted to highlight that with the British pound, and we had over here this going to the indicators to give us an indication of what is happening, as I said, to the individual currencies. Let's just move them over here. And what I've done here, I think those of you may have seen this before, I've got 3 time frames for the CSI, and I've actually put the matrix indicator on the same chart, and this always irritates me when MT5, those of you who may not have come across it, is a great enhancement to MT4, and basically allows you to what is called to dock the charts, which means you can move them away onto another monitor. And you can see here the trouble I'm having actually expanding this chart. Anyway, I've got 3 time frames. I've got 30-minute, 10-minute, and 3-minute. And what it tells you immediately is what is being sold heavily or bought heavily. In these are the 3 time frames that I use on the faster time frame. Pardon? I've got a full house. Yes, I know. And what it tells you, you don't even have to look at all the charts to see. You've got the 30-minute. The pound is still, it's just turning down, and they rank at the, we see here, it is the pound pairs are the ones that are moving the most strongly. You see here the euro pound, heavy selling of the pound there. There's also the numbers. If you look at these numbers here on the matrix, this ranks the pairs, taking the giving us a view of which pairs are actually moving in the market in this time frame. We've got 30-minute, 10-minute, and 3-minute. I think it's fairly clear that the pound is being sold off very, very heavily. So that's the first bit of information that these indicators give you. On the CSI, you can see the yellow line moving down really strong. You can see on the 3 minutes, it's right at the bottom. Now, of course, like everything else, once it gets to an oversold or an overbought, it is going to bounce. It's going to reverse bounce. Whether that's enough to offer a potential trading opportunity depends. What happens is what's happening in the slower time frames. But what's interesting about the matrix is that it is just, I don't think I've ever seen it across these time frames where it is so relentless at the moment. And that is, as David said, yes, we've got CPI at the moment, but it is also because of Brexit. And that's even before we go and have a look at the chart. And what we can see here from the pairs, it's not, you've got the pound Aussie on the 10-minute being the weakest, but it's the pound yen over on the 3-minute and the 30-minute, which has taken the bottom slot, as it were. I also want to have a look at the Aussie dollar, because one of the aspects, because of this volatility and of the political influence on these pairs, you might think, well, you know what, is there something else that I could possibly go and look at? And one of the pairs I had a look at recently was the Aussie Canadian. Now that's a very interesting cross, and it's possibly one that a lot of traders wouldn't have considered. But when we look at the chart, certainly of the daily chart, that has been in a really nice trend down for a little while now, and it's also an example of using the beginning of the week, the beginning of the month, to have a look at the slower time frame charts, see what is perhaps in congestion, see what is perhaps going to move in the days and weeks ahead, and perhaps even, go into one of these cross pairs that a lot of traders may not consider, but could actually offer some really nice trading opportunities. And to do with the Aussie, of course, we had a similar situation at the weekend where the election result was totally against what the pollsters have been saying, and even the sports betting companies have said. And if you may have read, one sports betting company paid out ahead of the result of the election because everyone was so convinced that the government, that the ruling party wouldn't get back in. I think they lost 1.3 million in bets, I think, when the result did not go the way that the pollsters had anticipated. The Aussie is also interesting. This is again having a look, think ahead and look ahead to a particular currency, and that is there is talk that the RBA is going to be cutting rates at the June meeting, which is not that far ahead. Cutting rates is normally bad for currency, more sell of the Aussie. The Aussie is also tied to what is happening in China. It's all these strands, it's all this background stuff that you have to just have in the back of your mind and understand that will help to make more sense of the price action. And of course, it's the VPA which will actually confirm whether the price, the moves that you're seeing are actually valid or not. And in fact, I've still got my Euro Aussie. I've still got, and that's quite interesting because we've got a nice VPA lesson on the daily chart there. But I just want to pass over to David.
That's okay. Thanks, darling. Just very quickly to pick up on that. And to give you a heads up, one of the things we're looking at in terms of the roadmap for the currency matrix is, Anna mentioned the numbers, which obviously appear, and we've used that to develop the ranking ladder. But what we're also thinking of now is to come up with some sort of way of printing the levels that these achieve, because as you can see there across the three time frames, the numbers per se are different. 42 on 30. I'm just looking at the bottom in terms of pound yen. You've got 42, 43, 29 on 10, and 18 or 19 on the 3 minute. So what we're thinking of doing is a little bit like the CSI, for example, where you've got the 80-20, where it just gives a guide as to when you're approaching overbought and oversold in terms of the currency. What we want to come up with is some sort of methodology of doing that in terms of the currency matrix, so that when, for example, on a 3 minute you start to get down to 20, maybe in one extreme or the other, it just gives you a guide as to the possible reversal opportunities of that particular currency currency pair rather, moving to an oversold or overbought condition. We've got it on the currency array. But we're looking to kind of bring that in onto the matrix, so that rather, I mean, we use this every day, so we have a pretty good idea of what is a high number or a medium number or a low number, for example, at the extremes. And I'm sure you do the same when you're using it. You will very quickly develop that. But we want to try and make it a little bit more scientific, if you will, and actually represent those levels in some way. For the matrix. So it's just an idea we have that we're looking at investigating, exploring in terms of the matrix. I'm going to pass back to Anna. Still got heavy selling. In terms of the Aussie, just picking up on the Aussie, the blue line there, if you were going to look at the Aussie as an opportunity, certainly on an intraday basis, then the pairs that you wouldn't look at examples for, let's take the CSI in the middle there. You've got the Aussie rising with the CAD, you've got the Aussie rising with the Swiss franc, the green line. You've got the Aussie rising with the yen to some extent. It's a little bit flat. Probably where there would be some development in terms of Aussie is obviously against the pound, because you've got such heavy selling of the pound right now, which would certainly drive the pound Aussie as well amongst all the others. But in terms of picking off the Aussie against another pair, it's a little bit limited at the moment. So you'd probably want to wait. I'm just scanning over onto the 3 minute. The Aussie is now moving up to overbought. Euro starting to kick down a bit. There's not a lot in terms of looking at isolating out an Aussie pair for trading that you'd want to consider outside of all the others. So again, we always look at the CSI for opportunities, but also it tells us which pair or which currency is perhaps not one to consider right now, and go off and look at other opportunities. That's what it's about. We call it the radar on the market. That's really what it is. It scans the market constantly and delivers the opportunities. Just going to pass back to Anna.
been talking, London has actually opened. Let's have a look. Let's just bring up cable. Most traders trade on cable. Again, a lot of the trends that we've seen on the charts, they've been the break away from the volume point of control here. This is where we have a volume meets price meets time, and it's where there is, over a period of time, sometimes a very long period of time, as we saw with the if you look at the daily chart of the Aussie yen, the market, the pair don't really move very. They move, but there is no clear direction for a trend, certainly on the slower time frames. But then when you do get this clean breakaway, this is when you get these these really fantastic trends. And what we're looking for here is we want to see prices move away and an agreement, some kind of synergy between the range of the candles and the volume that is underneath. Because what you need in a falling market, you need volume, you need activity to show that this is a valid move and not not a trap move or an inauthentic move. And what we're seeing at the moment, certainly this was yesterday, this is the shoot up and then the down again. Volume wasn't actually massive under that. Would you say that, David? It's certainly not. And you would almost say, well, it's what we then call an anomaly. Does that mean we're going to get a reversal of an anomaly? Not necessarily. It is just that, an anomaly. And in fact, the selling has continued overnight and into the session as we speak at the moment. But it's something certainly to bear in mind, certainly on a slower time frame, to show that is it perhaps reaching some kind of a bottom. And can I just talk about something, what we call benchmark charts? And people write to me and say, well, what time frames should I use to trade, as it were? That is something, there is no hard and fast rule. This time frame with that time frame with that time is the optimal. You have to kind of try them for yourself. If you, say, want to take a trade on something like a 3-minute and a 5-minute chart, you're going to have a chart to reference that price action. So it would possibly maybe be the 30 or the 1 hour chart, because what is happening on the slower time frame charts will explain, that will perhaps highlight the trading opportunities on the faster time frame. So if the 1 hour chart is on a is heavily bearish, then if you're going to be on the faster chart, the chances are you will be going in the general trend, the primary trend that is in the slower time frame. And if you want to take the trade on the 1 hour chart, well, you would benchmark that against maybe well, even the daily chart, possibly. And there is no hard and fast rule about this. And traders think, oh, which is why a lot of them just stick to one time frame. But sticking to one time frame is, in our opinion, is a very high risk strategy to take. So that's cable at the moment. Are you looking at any of the pound pairs at the moment or not, David? You've got cable up as well. In that case, yeah, okay. Just before that, can I just go over to Euro Aussie? Because this is one that is actually of interest to of a personal interest in this, because it's looking for a short on this on a longer time frame. And what's interesting, this is where the heat map comes in. We don't often talk about the heat map in these sessions, and this is where you are looking possibly for some big turning points. It's as you can see here, it looks at the price action across the different time frames as well. So it ranks the pairs, and then you also have what is happening on the different time frames. And yesterday, actually, the Euro Aussie was at the top spot, and in fact, it's now the Euro Pound, primarily because of pound selling. And let me just take this out of the way quickly. And this is one of the reasons, and please, this is not a recommendation. This is not, we don't give trading recommendations in this room. This is purely as an example of what the indicators are highlighting, but also there's some interesting lessons on this chart. There are gaps. This is the gap down that we had on the result of the Aussie election. There was an immediate buying of the Aussie, and it's also a great example of gaps getting filled. You don't often see gaps in the forex market. You see them when you do get what I call these extreme political risks. The Aussie result was that an extreme political risk, only to the extent that it was very, very unexpected. So that is when you tend to see gaps all the time on stock markets and some of the other markets. So it's gaps, but the same principles apply. Gaps do get filled. Now, this has been, as I said, this is the strong uptrend that we've had with the Euro Aussie. Again, the move away from the volume point of control, a congestion phase. Congestion phases, you know, a lot of traders find them very frustrating because the price is contained, some in a very narrow range, some in a wide range. If it's in a wide range on the slower time frame, there are going to be plenty of opportunities down in the faster time frames. But if it's in a tight range on a slower time frame, on a faster time frame, it is really very, very frustrating. Lots of whipsaw action, lots of choppy price action. But you can see here you've had this huge amount of volume coming in under this candle here, which is an anomaly in the sense that it's like a doji candle, which is sort of indecision. But in that volume, there was certainly price support coming in. Then we have a big up candle again, not as much volume under this one, but a lot of volume underneath it. Then we had a sort of a wick to the top. Then we had a down candle with a wick to the top, but certainly not enough to reverse this move. Why? Because, you know, although there's volume underneath it, that is a very compressed candle. What you need is, what you want to see when you see high volume, you want big rangy candles so that the price action and the volume is in agreement. When they're not in agreement, you know, it's what we call an anomaly. But this is the sequence of candles. This was before the election. We have rising price, wicks to the top, falling volume, rising price, wicks to the top, falling volume. Then we had the election, which came in out of the blue, and it had an immediate drop. But because it was in a gap, that's come back again. We've got a doji, not a lot of volume underneath it. Again, this up candle, and this is the candle which is now catching my eye in the sense that I know it's got wicks to the top and the bottom, quite a wide body. But look at the volume. It's, you know, it's a I wouldn't say a fraction, but it's less than half that was under this candle. And compressed price action. And now again, there's effort to rise. I've got a very clear resistance level at 62.60. I know it's at the top of the heat map, and it's a case of now I've got to be patient because, you know, it doesn't want to fall at the moment, but at some point it will. I can't you know, I can't give a precise time when it will fall, but by looking at the volume, also the trend monitor is still blue. I know what my resistance levels are. Let's just close that down a bit so we can see where we are on a wider, on a greater date reference timeline, as it were. And what have we got here? We're reaching here we are. This resistance level here, we can see it's got resistance here, then we've got this resistance here. So is it possibly a time that it could turn over? Who knows? We'll have to wait and see. But I'm also conscious of the fact that, you know, the RBA are thinking of interest rate cuts. So it's really an interesting one to watch, not only from the VPA lessons, but also as because David and I tend to place trades. We do some intraday trading, but a lot of our trades these days we do tend to hold for days, if not weeks. So that's what I wanted to say about the Euro Aussie. Anything you want to say on that one, David, or can I just move over to you now? Yeah, do you want to say that?
No, that's fine. Just to really add my 2 pennies worth to that chart. It really is a nice example of a run-up associated with falling volume, and it's just a classic signal that that particular market is for the time being running out of strength. It's looking a little bit tired, a little bit weak. And of course, the other aspect to the RBA decision is if they decide not to cut, then that may well inject some momentum into the Aussie in a positive sense. because it's a relief that, in fact, perhaps things are not quite so bad as was surmised in terms of a potential rate cut. So again, it's down to what's going on in terms of fundamentals and reading that accordingly. Just looking at the other charts there. Yeah, okay. Yep, can do. I've got cable running over here on multiple time frames. Just staying with the pound. Just switch over as I'm talking. Should be coming up any minute now. Just to highlight the Renko, this is the Renko, and if you're, just put that down again there, excuse me, just 1 minute. If you haven't used a Renko or a non-time-based chart with a time-based approach, it really is just a great way to blend the two. In terms of the Renko, it smooths out the price action. You can use it as an entry mechanism, or you can use it as a chart, which I'd say probably we use more than ever, is very much a chart to help you to stay in, because that is the hardest part of trading, bar none. It's not about the getting in and the getting out. I mean, often you get out because you're triggered on a stop, or you get out ahead of news, or you get out for all sorts of different reasons. Perhaps you've gone into congestion and you just got some profit in there, you just want to take it off the table. You don't want to sit through a congestion phase. But actually sitting through these phases of price action, that is where, you know, the pressure, the emotional pressure really starts to kick in when you've maybe taken some of this out here, maybe you got through below here and you've got a little bit of profit here. Let's say, for example, you've gone from, where are we, 27 down. Let's just move the chat box out of the way if I can grab it. There we are. I mean, maybe you've gone, 10, 12 pips or something like that. You're a scalping trader. And then you move into these congestion phases. Those are the points at which your emotional trigger will kick in and you want to close out. And the Renko just smooths that out a little bit. Yes, you get a little bit of up and down. Yes, you get the same sort of support and resistance regions building with the accumulation distribution indicator, and you get exactly the same in terms of the MT4 and MT5 support and resistance. It's price-based, and it delivers those levels either strong or less strong. In this case, it's denoted with the thickness of the line. So this has been tested twice. This has been tested 3 times. So it's a little bit wider than the one below. And this is a oneer, if you like. This has been tested just once, so it's not particularly strong, and the width of the line is that much thinner. So it just gives you a visual heads up on the strength. In terms of the MT5 and MT4, it's done through the metric of either a dash line for less weak or a solid line for stronger. But the principles are exactly the same. And in terms of applying the other indicators, you've got the trend monitor here at the bottom. When we went through this phase of price action here, the trend monitor remained steadfastly red. Just really not a flicker of emotion. It didn't go into a darker red at any time, just a bright red. The trend dots, however, are very close to the price action, and they do transition into these transitional colors of gray when we're in a congestion phase, and often into blue when we get little kick-ups. But then we're back into red again. You can see it down here. We've gone into a reversal. We've got the pivots top and bottom, just highlighting the fact that we've got some short-term strength and weakness coming into the market as we go into a congestion phase, which is one of the ways of using the pivots, which is one of the aspects of pivot behavior we actually teach in the education program. And then we've gone into the transitional colors. Now the trend dots will always change first because they're very close to the price action, but the trend monitor continues to hold bright red for the time being. And that's one of the powerful blends, if you will, of using a non-time-based chart, which reveals strength and momentum visually on the chart, because it's not a metric of time. It is a metric of how quickly the brick builds in terms of the size of the brick. And that, in terms of certainly NinjaTrader and also MT4 and MT5, is we've developed this indicator to give you the optimal setting. On Renko, you just select the time horizon down here. So we've got this on 1 minute at the moment, and that delivers the brick size that we're on at the moment. That's the optimal size. Of course, you can set this to your preferred size, but what we're actually doing with the Renko optimizer and also with the Renko charting indicator on MT5 is giving the option for you to allow the indicator to deliver the optimal setting for you, so you don't have to guess. It's not a case of saying, oh, well, I'm on cable, so I don't know, is it a pip and a half? Is it 2 pips, 2.5 pips? What is it? It does that all automatically for you. At the moment, we're running at 19 In other words, 1.9 pips for cable right now in the London session. Just pop that down again. I've got some pretty fast charts. This is on 15-second. This is only on NinjaTrader, but it's just a. I'm not suggesting you move down to this sort of time frame, other than if you want to practice VPA, it is a great way to practice, get a fast chart, get a 1-minute chart if you're on MetaQuotes or MetaTrader, for example. It really does hone the skills of reading a chart quickly and interpreting what is going on. If you're using it in association with slower time frame charts, in inverted commas, I've got the 5-minute here, I've got the 15-minute over here, and right down onto the 30, then it just gives you a heads up as to the price action, what's going on in terms of the very fast time frames. We've got we've got a deal of congestion going on here. We've got our levels building. We've got a strong level up here. We've got a less strong level of support down here. We're trading around the volume point of control. If we break away through this region, I don't know, down to, where are we, 163, 63, 64 down at that level, very light volume down here. We've got a potential platform of support which appears to be breached as I'm talking. Now going down onto the next level. It just gives you a sense of what is going on in terms of the very fast time frames, and therefore if that continues and develops further, and this is a universal concept, then the development of that trend will ultimately move through to your slower time frames, whatever multiple time frames you are trading. And whether that applies to the indicators or the charts themselves, that is how to apply an approach to trading which uses multiple time frames. And in this case, we're also using the blend of a Renko chart down in the middle here to help give us that smoothing action, if you will, and to help calm the nerves which will kick in inevitably as these moves develop. Let's just pop that open again. There we go. Seem to be moving to the downside once more. Pivots, we've got pivot highs. We've got a nice level in here, which is defining that region of ceiling of resistance, if you will. We've had some transitional colors here, not a flicker of change on the trend monitor, as I mentioned earlier. This is the floor. Here we seem to be breaking away from that nicely now. The trend dots are now above, pushing down. And that's another aspect of the trend dot behavior, if you will. What you want to see, obviously, certainly in terms of Renko, is where the trend dots themselves sitting above the price action, adding downwards pressure. Once they start to move below, then pressure obviously is diminishing, and with a potential move to the upside. But what we want to see right now is these trend dots sitting above and adding further pressure to the downwards move, which we're seeing at the moment continuing. Just going over onto the daily, just to go back onto the daily chart again. In terms of re-entry signals, and we talk a lot about this again in the program, but if you're looking for, this could be a 1-minute chart, this happens to be a daily, but the principles are exactly the same. We know why this candle happened yesterday, and ironically, when you look at a daily chart, it's very hard sometimes to actually tease apart what actually went on in the day. But if you look at it, the bulk of this price action, all this price action, was actually condensed into a relatively short space of time. This was not a day when the market started off at this level, gradually climbed throughout the trading session, maybe into the US session, and then perhaps for some reason, maybe there was some fundamental news came in, and that was a dollar positive, so that drove cable lower. And ultimately we closed off in the evening with the market back down here. That wasn't the case at all. What actually happened was this price action in here, the bulk of this price action of 100, 150 pip move, whatever it was actually compressed in about, I think it was about an hour or so. So when you look at a daily chart, it's very easy to look at it and think, oh, well, this was a confirmation of whatever, confirmation of strength in the morning and weakness in the afternoon. Not like at all. So you do have to tease that apart. Just if you're sitting in front of a screen all day long, then you'll know exactly what went on. But if you just took this at face value, that's the sort of interpretation you would come to. Now, whether that matters or not, of course it does, because you need to understand what the drivers were on the day. But from a longer term perspective, what we're seeing here is very straightforward VPA analysis. We've got decent volume under that candle. We've got weakness on the candle. The market tried to rally for whatever reason. We know the political reasons, but for whatever reason, tried to rally, failed. These are the sort of re-entry signals where if you've missed a move, you haven't joined that move, and you're looking for a point to get back into a trend that's developing, Those are the sorts of signals that you'll see. You'll see congestion, you'll see it particularly in terms of a move lower, you'll see the market move lower in a nice price waterfall into a congestion phase. Then there will be an attempt to rally. Now that attempt to rally could come with low volume. In other words, there's absolutely no interest in moving higher anyway. Could be confirmed with weak candles. Or alternatively, what you also see a great deal is a lot of volume coming in, and again, a weak price action, attempts to rally, falling back, lots of volume driving into the markets, telling the market makers are selling into weakness, therefore expect further weakness to come. It's that simple. But these are the sort of re-entry candles you're always looking for in all time frames. To see what else is going across the piece, just have a quick look at, let's just go over, head over to the CSI, because I've got the currency matrix up there as well. Still, as you can see, this is on 15-minute. Just go back onto 5. The pound down here. Let's just isolate out the pound again on that one. There we go. We've still got very heavy selling across the piece. There's nothing really slowing down. I mean, the pound Swiss, you can understand, why these pairs are doing what they're doing. They're all ranked at the bottom here. And interestingly now, cable is not, the weakest. Certainly the pound yen is, and up at the top the euro pound. Up onto 15, exactly the same picture there. Continuing, and that's on 5 again. Sorry, that's just a repeat of the early one. Let's just have a quick look at the array. Let's just isolate out the pound on the array. This is on 10 minutes, so a slightly different time frame. And this is really just giving you a heads up, a visual of many things, not least of all sentiment, which is universal to the pound selling. It's also telling you the strength of momentum. You can see the strongest momentum, the steepest line, if you like, is on the pound yen down here at the bottom, and the euro pound up the top. So the heaviest, the greatest trend is developing in terms of the pound yen right now, certainly on the 10-minute time frame. And also with the array, as I mentioned earlier, in terms of the currency matrix, what this also delivers down the ranking ladder is potential opportunities for oversold and overbought. In other words, when we're getting to extremes, either at the top and bottom, and that's another aspect of it's bringing in the element of overbought and oversold in terms of a currency pair, as opposed to a currency themselves, which we see on the CSI itself. Let's just go back to the charts, and I'll hand back to Anna. There we go. Just move that out of the way. A little bit of a pulse point developing. You can see we've got, just go up onto 5. There we are. Got some decent volume. And remember, in terms of volume comparison, what we're looking at now is really from this point, which is London Open. So we can compare this volume in here. We get the natural pickup in volume through Europe from 7 o'clock here through to 8 o'clock. And now we're looking at comparing these volumes here. And you can see how much effort there is to rally. We've got a lot of volume. This is almost the highest volume of this session so far from the London Open. Markets tried to rally and really has failed. Pivot to the upside. And we're now waiting for perhaps the next drop down to a lower level. I'm going to pass back to Anna.
This is my profile on MT5 of cable, and the way I've got it set up here. I've got a daily chart. I've got the 30-minute chart here because I want to see the levels that I think where this price may be heading to. This is based on our Camarilla indicator. What I wrote yesterday about this was the dramatic move that we saw during the 4 o'clock event with the Theresa May speech, and we had the volatility, the shooting up of the pound because there was talk of what she was offering as a softer, in inverted commas, Brexit, and then you had the political reaction to that. And as David said, that was the price. So you see a daily candle, and it's very difficult to judge in the daily candle, where the bulk of the price action took place, and it actually took place while she while she was speaking. But what volatility candles also do, and it's not something we've covered in this session, but we're going to talk about it in the webinars to come, and that is when they're posted on the chart as they are here, the reaction, the general reaction is that the price moves back into the spread of the candle. We saw that here as well, went into that one. We've had one here. You see, this is the lower down. It did go back into the spread of the candle and then carries on further down. And what you have to do is to wait for a clear direction. Now, because this was at sort of 4 o'clock as well, towards the end of, I think the fix had happened, or after the fix, as it were, when we were going into just the New York session, goes back into the spread of the candle. And as I wrote on Facebook, what the volatility candle also does, it gives you another level of support and resistance so that you can judge if the original move is going to carry on, that's higher, or is it going to break to the downside? And this is what you have to wait for. But because we went into Asia, it did break to the downside. It really kind of meandered. It kind of went back into the candle, and then into London this morning. And then we've had this further break lower for cable. So volatility candles tell us so much, help us with the trading decisions if you're in a trade, but they can also give us another piece of very important information, and that is also of themselves give us some more levels, if you like, levels of support and resistance that either have to be breached if so that we can get a firm direction for the price action. And on the 3-minute chart, this is a great example. Again, congestion ahead. This is at 6:30. This is 8:30. This is 2 hours. You've got to take 2 hours off a local time. This is where it was ahead at 6:30, just before the Open, the European Open, and that is when you started to get this this pull away. Now, the volume underneath here, you think, well, you know, you think, well, you have to remember this massive volume. This is all connected to the London Open. So it is, you have to see it in a relative, you have to read it in context. If you ignore that, this would have been good volume coming underneath this move lower. You can see this, falling prices, rising volume. Now this candle is the interesting one. This candle here, let me just expand this because this is really important in this move lower. Where's it gone? Where's it gone? Where's it gone? Where's it gone? Here, this one. So we have this initial break from the volume point of control. Falling prices, nicely rising volume. Then you have this candle coming in. You see how squished it is and compressed it with a ton of volume underneath it. If that was going to go higher, that should have moved higher. What is also accompanied with is with volatility. It's outside the average true range. What happens is price retreats into within the spread of the candle, ton of volume comes in. We also have another volatility triggered, a lot of volume underneath it, great, but it's moving lower. Then this candle, look at the volume underneath it. If that's going to go back up the other way, it's going to need a lot more volume than you see under that candle. And then it carries on down. And the volume is, it's in agreement with the candles that are being formed as the price action develops. And then we have this inrush, as we see here with London. So this is all compressed down, but the VPA lessons are valid, just as valid here as they are here. Simply because these are lower, you have to read it in the context of the session that you are looking at. So that's that. And then this is my version of the Renko. This is on MT5. This is the break lower, and it's been consistently red. We had this little correction here. There was a slight change in trend dot, as we can see. It went to grey. We even had 2 blue trend dots, but look at where the trend dots are positioned. They're at the top of the bricks, pushing the price lower, and this has stayed relentlessly red. Now, nothing, you know, after such an extreme move, what are we going to expect? Well, there's going to be a certain amount, you know, moves come to a point, a pause point, an exhaustion point. Those exhaustion points can be temporary. They're going to go into congestion, and we know they're going to go into congestion. Why? Because we've got the CPI at 9:30. So I think that brings everything together. Do you want to add anything to that? Do you agree? Anything else you want to say about the price action under there? No, that's it. Brilliant. Okay, very, very quickly. We've gone over time as usual. I do apologize for that. Very, very quickly, here we are. All the indicators are here. You can find details of them at quantumtrading.com. The ones we'll be looking at today are for MT45 and NinjaTrader. If you scroll down past our pictures, you will be able to click on any of these boxes and they take you to the details of the indicator themselves. You just click on that and it should bring up. And here you will find all the videos that David has done, all the support pages explaining how you can incorporate them into your own trading. You can buy them on an individual basis, little bundles, or buy the package, all covered by 7-day money back guarantee. And if you start with one and then upgrade, you'll always get a credit for that as well. Yes, and particularly if you've got the CSI and you want to upgrade to the dashboard, you will always be credited with what you have spent with us. What else was I going to say about it? Yes, and actually, if you're going, yes, we're working on a new platform. That's a nice piece of you. What I was going to say was, if you do buy the package and you have the package, when we develop new indicators, they are automatically added to your package. And the latest one is actually an index for the British pound. So if you haven't downloaded your British pound, if you've got MT45 or NinjaTrader, head over to Labs, Quantum Labs.
Yeah, or drop the
or if you drop the details off, drop the details to Jonathan, which is helpdesk at quantumtrading.com. He and the guys in customer service will be able to help you. We mentioned the Forest program. That's on another site. It's called quantumtradingeducation.com. The details of the modules that are available with the course, but the course does include, you have to opt for one of the platforms that comes with the program, but you can change from one platform to the other. But you have to be if you start with TradingView, that is the cheapest option, isn't it? Because we haven't been able to develop all the indicators for TradingView. It's a restriction of the script that is available with TradingView. Is that it? We're back later at 1:45. Be interesting to see what happens with the British pound. Well, certainly there seems to be political moves afoot to actually get rid of Theresa May ahead of when she says she's going to go. She's clinging on by her fingernails at the moment. So we'll see what happens there. Also the CPI. And then we're back this afternoon as well for day trading the indices. I think we're going to look at gold today, aren't we? We're going to be looking at day trading the gold chart, which is interesting as always. Thank you so much for coming. I hope you've enjoyed it. I hope you've learned something, discovered something perhaps you didn't know before. Have a great trading day. Enjoy the rest of the week, and we will be back next Tuesday if we don't see you at one of the webinars later on today. Or even Thursday. We're back. No, should I say Tuesday? Oh, God. We are back next Thursday. Take care. Bye.